All right, everybody, good morning. Welcome to today's webinar, How to Trade Like the Pros. Hey, quick sound check just to make sure you guys all can hear me okay, if you don't mind. Those of you joining me via GoToWebinar, there we go. Thank you, Robert. Thank you, Ian. Oh, awesome. You guys can hear me. You can see my screen. Fantastic. I want to thank everybody that's joining me via YouTube as well. So we are streaming live on YouTube. So hope everybody's doing well. My name is Jerry D'Ambrosio. I'm the manager of educational content here with VectorVest. Always like to introduce you guys to our team. Been with VectorVest now 17 years. And when I first started, the education department was maybe one or two people. We've grown quite a bit over the years. And back then, our education really focused on the VectorVest program. How to build watch lists, how to run Unisearch. There's so many different bells and whistles within the tool and so many features within each bell and whistle that we focused a lot on navigation and just building stuff within the program, running back tests, creating portfolios, things like that. What I've seen obviously over the years is that we've evolved into teaching folks how to trade and how to invest and how to trade options and how to manage retirement portfolios and swing trading portfolios. And that's what we're going to be doing or talking about today. You're going to learn a technique that you can use in your swing trading portfolio. Okay. First, I call them the three gets. Get number one, grab a pen, piece of paper, something to drink. Yeah, Said we are gonna do that. I appreciate that. Absolutely. Pen and piece of paper. I'm going to ask you guys to write a few things down later. So that would help. Also, you guys want to take notes. Pen and a piece of paper will help there as well. Number two, get rid of any distractions. This isn't so tough maybe at 11 a.m. Eastern time, but sometimes later on when I do webinars, it's 4:30, 6 o'clock at night. My kids are home. My wife does such a great job of keeping them distracted so they don't distract me. A little easier when nobody's around because number three, you guys are here ready to learn. 11 o'clock in the morning on a Tuesday. Hey, you heard what this webinar was called, How to Trade Like the Pros. Well, you probably thought that I'm going to teach you something about how the pros trade, right? And again, you're going to be able to use the technique that I teach you. I use it a lot. I love it in your swing trading portfolio right away. You're going to learn today we'll start off with 5 common principles professional traders follow. Number 2, an extremely easy and effective short-term trading strategy. And finally, how to quickly and easily identify the best trades. Now, my promise to you is if you follow the steps that we discussed today, you'll know how to identify the correct setup, entry, and exit for every trade that you place. Okay? We've got a lot to cover today. I really want you to stick with me to the end. We'll be together for about an hour. If you stay with me to the end, I will share with you a copy of the slides that I'm using today. I'll be in the slides most of the time. That's why I said maybe take out a pen and a piece of paper. I am recording this session as well. You'll get this recording later on. So, but if you got to stick with me to the end in order to get the slides. Somebody remind me at the end. I sometimes forget. I have a lot of content that I cover here in this hour. So just somebody remind me at about 11:45 or so Eastern time, and I'll put the slides in the handout section of your GoToMeeting control panel. If you're joining me via YouTube, you'll get those via email as well. All right. First off, what makes a pro a pro? What are the qualities that separates these men and women from the average retail investor? We've heard that term a lot lately, right? Retail investors. I think it really became mainstream in 2020. I think after the COVID crash, a lot of talking heads on TV always talked about, a new crop of retail investors are kind of joining the party. And there were a lot of new accounts that opened up during and after the COVID crash. I don't know if you guys remember that. But what really separates them from average traders? This segment here is all about getting you in the correct mindset, all right? Because this isn't your buy and hold retirement approach. This isn't a ton of fundamental valuation. This is for the capital maybe that you have set aside to trade a little bit more actively and use moving averages and technical indicators to help pinpoint exits and entries. We feel you should be doing that. makes you a more well-rounded investor and trader, right? You may have money set aside where you're trading options only. You've learned how to trade options over the years, and you know, managing an option trade and managing a stock trade, completely different. Let's kind of separate our overall investment capital to these instruments, to these other vehicles. Maybe you're managing self-directing a retirement type of portfolio. Fundamental valuation and earnings analysis and things like that are important, right? But you've allocated a portion to that portfolio. And we feel this, you should be doing the same. If you're starting to learn about swing trading techniques, you feel comfortable, with the action, because it is a lot more action, right? You are making more trades in a shorter period of time than you would in a retirement portfolio. It's common knowledge. That's what you're really doing here, trying to capture profits quickly and moving on, as opposed to waiting it out and kind of playing the long game. First is that a professional trader is realistic. They know that there's no magic pill that they could take that will make them better traders overnight. So success in this industry, in any industry really, comes with time and effort. You ask anyone who's ever gotten to the top of their fields, right? Construction, finance, sports, entertainment, anything where it probably wasn't handed to them. They did put in some time and effort, and they'll tell you that it didn't happen overnight and it did take hard work. So know that going in, that this is not an overnight or get-rich-quick scheme. It requires a little bit on effort on your part. Next is that they control their emotions. Now, this is easier said than done. We're talking about our money here, making it or losing it. It does invoke, an emotional reaction a lot of times. The pros, they control their emotions. They don't allow losing trades to affect them. They don't think of the results first. They focus on doing the right things, making the right trades. They know that if they do that, the money will come. So we don't want to be like this guy, right? We're getting violent or going on tilt. You guys ever hear that term before? It's a poker term, on tilt. If you lose a bad hand, maybe you made a bad decision or you got a bad beat, you lose a big hand, and you can see the visceral reaction from a poker player after a bad beat. Now that's going to carry over into decisions moving forward. Not playing the right hands, playing the wrong hand again, things like that. And that's just the same goes with stock trading. You're going to be making decisions moving forward. You're not just going to stop and walk away. So we just got to make sure that we control our emotions, don't allow them to affect the next decision, because it'll just snowball from there. One of the reasons that they feel this way in terms of not allowing emotions to enter into the equation is because they place trades based on facts and data rather than a gut feeling. We've all been there, earlier on in my career, I placed trades because just had that feeling, whether it be a recommendation from a family member or a newsletter that I read or, stock that Kramer talked about on television. Pros don't think or trade that way. They look solely at the information in front of them to make decisions. And a lot of professional swing trading techniques, they use moving averages and technical indicators. These aren't technical indicators that they necessarily created, although some of them are. Wells Wilder created RSI. George Lane created stochastics. So obviously there are folks that came up with these indicators, but there are also traders that use these indicators in their own type of approach and their own type of system. The indicators work. How you apply them is a different story. So, it does that. These guys and gals are placing trades based on these indicators, and they feel very confident that the indicators will work. Now, why do they feel so confident? Is because they're prepared. They know exactly when they're going to get out of a trade even before getting in. So it's not like they start to use an indicator and just begin to trade it right away without examining and testing different setups and different techniques to figure out which one is best. Lastly, most importantly, I think professional traders are disciplined. They stay sharp and focused when things are going well, but they're resilient when things aren't going so well. They have a plan and they stick to that plan. Okay? What happens if you, in each of you, continue to struggle with some of these things? Maybe you're someone man, that their emotions really get in the way, kind of get in your own way, right? You've heard that expression before. You get in your own way, or you don't have a plan necessarily. You don't know when you're going to get out of a trade the moment you get in. If you continue to struggle with some of these things, you're going to go broke. Now, I don't mean you're going to be unemployed, living on the streets, but you're not going to be playing this game too much longer, because losses will keep building up, and you'll wind up broke with no more money to invest. If done the right way, if you start to correct these mistakes or just adapt these traits, right, these characteristics that these professional traders follow and exhibit daily, you'll know what you're doing no matter the situation that is presented to you. Think about the confidence that you'll have. Also, once you start to develop better habits, you will start to see more consistent gains. There is a big mistake, though, that traders make when first starting to implement short-term trading systems. They follow unproven, complicated strategies. They feel like they need to throw on 6 different technical indicators and 4 different types of moving averages to help identify entries and exits. For some reason, new traders who are just starting out trading this way, they find value in complexity. I remember when I first started, or I don't know, maybe I started with VectorVest in 06, maybe 2009, 2010, I was going to the money shows and the traders expos, and we did that for a while. We don't attend those live anymore. I don't know how heavily attended those are anymore. I know they still do them. I get the money show emails all the time. But I remember at our booth, subscribers, non-subscribers, they would come up to me or us at the booth and kind of show us their book of charts. And, I remember I asking, why do you have so many indicators on this chart? I never really got a straight answer, but what I wanted to convey to them was, listen, it's going to lead to confusion and frustration. You're not going to get clear signals. You got redundant indicators on this chart. You got conflicting indicators on this chart. This is not a solid approach. Keep it simple, kind of dial things down, because it will lead to confusion, frustration, and you'll give up. You won't know what's going on. So that's why I want to teach you the system, or a system called the RSI-2. RSI-2 trading system was developed by Larry Connors. Larry Connors is an author. He's a trader. He's got over 40 years in the financial markets industry. This strategy focuses on stocks in long-term uptrends, but are experiencing short-term corrections. All right, that's ideal, right? I want a stock in a long-term uptrend that's pulling back, experiencing a short-term correction. Easier said than done, a rather vague statement, right? But he defines those situations. And what I love about this system is that it is so simple. It only uses 3 indicators. A 200-day simple moving average to identify the long-term trend, and a 5-day simple moving average and the 2-period RSI. He slaps both of those indicators on for the short-term trend or the short-term correction. Let me show you how this strategy works. Here we're looking at Procter & Gamble. Now the time frame here is from November of 18 to November of 19. Don't worry why I went back so far. I'll explain why I went back so far in a little bit. I want to teach you the system, right? I can teach you the RSI-2 system on stock XYZ from 1962, right? It doesn't matter. It's the setup that I'm going to show you. But again, I'll explain why I went back this far a little bit later. Overall, during this time frame, the stock goes from bottom left to upper right. Stays above the 200-day moving average the entire time. What does that tell us? That tells us that during this entire time, the price of the stock was above the 200-day moving average, so the stock was in a long-term uptrend. It's in a long-term uptrend that's as of the hard right edge. It's in a long-term uptrend as of the hard left edge. The whole time it's been in a long-term uptrend. That is a prerequisite. Stock has to be in a long-term uptrend. The price of the stock has to be above the 200-day moving average. Now, there have been times, right? There were times where the stock pulls back. All stocks do. Stays above the 200-day moving average, but falls below the 5-period moving average. That's the white line running through price. So what does that tell us or indicate? Long-term uptrend, but short-term correction. Price below the 5-period moving average indicates a short-term correction, short-term pullback, short-term downtrend, if you will. Doesn't matter how you want to put it. Price below a 5-day moving average indicates a short-term downtrend. What would now? And I don't know if any of these, it's hard to tell. But what does price going below a 50-day moving average mean? What does that indicate? That indicates price is now in an intermediate-term downtrend. If price falls below the 20-day moving average, that's kind of your short mid-term moving average, right? Price falls below the 20-day moving average, you're in a kind of short to mid-term downtrend. Price below the 5-day moving average, very short-term downtrend. But that's not the whole picture, right? The system is called RSI2, so there's another indicator here. It's called Relative Strength Index. RSI, that's the green indicator at the bottom, is scaled between 0 and 100. Okay? The industry standard look-back period, industry standard meaning kind of the look-back period that most of the industry uses. I've seen shorter look-backs. I've seen a little bit longer look-backs, but the average is a 14-day relative strength index, 14-day look-back. Now, we are looking at a daily price chart here, so it's a 14-day RSI. If we were looking at a weekly price chart, it would be a 14-week RSI. So we're looking at a 14-day RSI with the lower extreme level below 30 and the upper extreme level above 70. Again, it's scaled between 0 and 100. And you can plot this on any stock. Now, using the industry standard setting of a 14-day RSI with the lower level of 30, you can see that the 14-period RSI only went below 30 once. That's kind of your buying signal. Not with the RSI2 system, but just using RSI in general. That's kind of, I want to lead with the industry standard way to use it. And the industry standard way to use it is to buy stocks when the 14-period RSI goes from below 30 to above 30. Good buying opportunity there, but the stock was in such a strong long-term uptrend that the 14-period RSI never dipped below 30 again. So Larry Connors looked at this and said, no, this is obviously not an indicator or not a level that I can use, because what he wanted to do is wanted to speed up the indicator. He wanted the RSI to produce more signals. So he sped the indicator up and changed the look-back period to a 2-day RSI. He lowered the extreme level from 30 to 10. Before you ask, you might be asking or thinking about asking, well, why? Why 2? Why did he lower it from 14 to 2? Why not 4? And why was the lower level lowered from 30 to 10? Why not 5? And why is he using a 5-day moving average and not a 5-day EMA or an 8-day EMA? I'm sure those questions are running through your heads. The only answer I would have for that is I'm not him, obviously. I could guess that it worked the best. This combination, he knew what he wanted to find, right? Long-term uptrend, short-term correction, doesn't want to use too many indicators. This combination, and he did rigorous testing for many, many years, this combination worked the best. This setup of the 200-day moving average and the 5-day simple moving average and the 2-period RSI going below 10 really produced favorable signals. So there's your setup. There's your trade. Price above the 200-day moving average, but below the 5-day moving average and the 2-period RSI below 10. There's your setup. All right, let's take a look at what it looks like written down, and then we'll look at some close-up examples of Procter & Gamble. Here are the entry rules. You buy only when the stock is above the 200-day moving average, but below the 5-day simple moving average, with the 2-period RSI below 10. And you buy near the close of that day. A little different than what we're used to, right? We're used to buying the next day, right? If you have a setup or a signal, usually you trade the stock the next day. Make sure it confirms, make sure the market confirms. This is a little bit of a different system. You're going to enter the trade as of the close of that day. So you are recognizing that these things are true late in the session, 3:30 maybe, 3:45. When I trade this system, I buy at about 3:55 p.m. Eastern time. Just put a market order in. I don't mess around with limit orders. There's a chance I might not get filled. So just put a market order in and hope to get filled by the close, and you will. The exit criteria, and notice how it says exit criteria. It doesn't say profit target, or it doesn't say stop loss. Larry Connors, in developing this system, found long-term that stop losses hurt performance. Stop losses in the general sense. If I'm down a certain percentage, I'm out. Or a certain level on the chart, I'm out. Stop loss, right? Below your cost basis. Where are you going to cut your loss? Below your cost basis, and generally referred to as a stop loss. This is an exit criteria. So the exit criteria is we will exit when price goes above the 5-day simple moving average. We enter when price is below it, right? Also with the 2-period RSI below 10, and we enter near the close of that day, and we are going to exit near the close of the day when we see that the price of the stock is going to close above the 5-day simple moving average. Same thing here, 3:50, 3:55 p.m. Eastern time, put a market order in, get out of the trade. So here are some examples, okay? Left brain, right brain people, right? I'm covering everybody. So the date selected there is July 23rd, 2019. Again, I could teach you what I'm about to teach you here from a stock from 1962. It doesn't matter. I'll explain why we're looking at these dates in a little bit. But here is the system. Notice though, okay, what do we have? We have the price of the stock, candlesticks, we have the 5-day moving average, and we have the 2-period RSI with the red line at 10. Notice we don't see the purple line, right? The purple 200-day moving average. We don't see it for obvious reasons because when I zoom in here this close, we just lose it. We don't have it. It's still underneath the price of the stock, but we've just zoomed in and the scale is in such a way where we lose the 200-day moving average. Just know with every trade every setup that I teach you here, price is above the 200-day moving average. So on July 23rd of 19, price is above the 200-day moving average, but it's about to close below its 5-day moving average. And the 2-period RSI did dip below 10 on that day. So we are recognizing this at the end of that day. And as of the close of that day, the price was 113.85. Now, I don't know what the price was at 3:55 p.m. Eastern time. I don't have that data. So for the purposes here, I'm going to use the closing price. We're trying to get in as close to the close as possible. Okay? So if you were to buy, and again, put a market order in right near the close, and your cost basis is about 113.85, when do you sell? You don't sell the next day. You don't sell the next day. You sell there on July 26th of 19 at roughly 114.73. The price of the stock on that day actually opened below the 5-day moving average, but crossed above it during the day and closed above it. You don't exit the trade as soon as price rises above the 5-day moving average. You wait for price to close above the 5-day simple moving average, and you exit right near the close. Now, that is a winning trade. It's a small winning trade, but it's a winning trade. Okay, and what I want to focus on first is winning trades and losing trades. What's my expected hit rate here? What's my expected winning percentage? That's what I want to focus on first. Then I'll add performance, a few more performance metrics in a little bit. Monetary performance. But let's focus first on winning trades and losing trades. Well, that's a winning trade. Okay, so that's one win so far. The very next day, we had another setup, didn't we? July 24th of 2019. Now, let's say you didn't buy Procter & Gamble the day before for whatever reason. You weren't feeling well. You weren't watching the market. You were on vacation. You weren't watching them. You didn't have any buying power left. You just weren't watching the market the day before. But you were on July 24th. So what I'm trying to kind of show you guys is no matter which date you take, what is your expected percentage, your expected hit rate? Okay. So on that day, if you took it, you bought it a little bit lower at 113.15. You still sold it on the same day, a couple of days later. Listen, I don't care what price did the next couple of days. Okay. We are not, this is a very rules-based system. So you'll see a couple, you'll see a couple of examples where price continue to move higher. You'll see a couple of examples where price continue to move lower. We don't know what the price was going to do after that, but we do know what the rules are, and we should follow them. So price closed again 114.73. That's another winning trade. That was July 24th of 2019. The next one was about 3 weeks later, 2 weeks later. August 5th of 2019. Price of the stock is still in a long-term uptrend, but obviously, as you could see, experiencing a short-term correction. Price well below the 5-day moving average, and the 2-period RSI dipped below 10 on that day. The 2-period RSI did not dip below 10 the day before or the day before, even though, right, price closed below the 5-day moving average both of those days. Those weren't setup days because the 2-period RSI not below 10. So there, if you buy at 113.08, you sell a couple of days later, 115.52. That's a nice little win there in just a couple of days. By the way, the average holding period for this system is 2 to 5 days. I told you it was a short-term system. Okay, 2 to 5 days. That's another winning trade. All right, 3 for 3 so far. Now, the very next setup was on September 10th of 2019. Now, this is not a technique. That's about a month, right? A little more than a month from the last setup. This is not a system where you're going to be buying and selling the same stock multiple times a week. Okay? So on September 10th of 2019, you got the same situation. Price is still in a long-term uptrend, but experiencing a short-term correction where price falls below the 5-day moving average and the 2-period RSI goes below 10. So if you buy there at 119.88, nice gain there, nice quick gain, right? 2 days, sell at 122.77. Here's an example where, price did break down for the next couple of days. You don't know that, but don't worry. Seeing that hopefully makes you not feel like you're missing out on another example where price moved higher, right? Because you don't know. You don't know what price is going to do after you sell. So you just want to follow the rules. October 2nd, 2019, that's the next one. So that's almost another month later. Now, you could be trading other stocks in between, right? But you're not going to be trading the same stock multiple times a week. You can be placing multiple trades on different stocks multiple times a week, but not the same stock. Very unlikely. Here, price is still in a long-term uptrend, short-term correction, 2-period RSI below 10. Close that day at 121.08. We sell the next day when price closes right at the high there. That's kind of your perfect trade, right? Close at 124. We sell right at near the close of the day. Another gain. All right, we're doing pretty well. I think we're 5 for 5 maybe. Now here, we lost money. Here's what a losing trade looks like. If we bought there at roughly 120.05, we sold there at 119.08. Again, I don't care what the price did the next day. That's a losing trade though, right? It's not necessarily we applied a stop loss to this trade. We're still using the exit criteria of the 5-day moving average. So in this case, price fell a little bit too much for us to recoup all of our loss or make money when eventually price closes above the 5-day moving average. Going to close above the 5-day moving average. It might fall for a couple of days or sometimes longer. I've seen it sometimes longer. It's eventually going to close above the 5-day moving average. That's when you exit. Now that sometimes may result in a winning trade. Sometimes it may result in a losing trade. That's the first loser of 6 consecutive trades so far. Now, if you didn't buy it on that day, didn't you have another opportunity the day before? So in 6 consecutive setups, we made money on 5, we lost on 1. Here is another setup, So if we would have bought there and sold there, well, let's put a tally mark in the win column because that's another winning trade. And another setup opportunity was a couple of days later, which also resulted in another winning trade. So out of 8 consecutive possible RSI2 setups, we saw 7 winning trades and 1 losing trade. That's kind of your expected hit rate on these 8 consecutive trades. Now, putting together this webinar, I learned early, or realized early, that I can't show 8 setups and have you believe that this is a 100%, not 100%, but very close though. This is a system that is efficient, is effective, is profitable. But not from a very small sample size of 8 trades. So that's why I went all the way back to November of 2008. Number one, I went back there because I wanted to teach you the system, and we went through it, and now we know how to trade it. But then what I did was, okay, I realized that 8 trade sample size wasn't enough, so I ran through the same exercise that I just ran through with you, all the way to current. One stock, Procter & Gamble. There were 78 RSI2 setups. I showed you guys 8 of them. There were 70 other ones during this time window here. 65 winning trades, 13 losing trades. That's an expected winning percentage of 84%. So, yes, if you would have traded every RSI2 setup, all 78 of them, from on Procter & Gamble from November 18 to current, you would have won 84% of the time. And that includes kind of the recent year and a half, because during this time frame here, most of May of 2022, all the way to almost to November of 2022, there were no trades, right? The price of the stock during that time period was below the 200-day moving average. So remember, it's a prerequisite. Price has to be above the 200-day moving average. What about during this time? Right? Even though the 2-period RSI fell below 10 a number of times, and it did so here as well, price was below the 200-day moving average. And we didn't start really playing the system long until kind of this area here. Now, this is as of a couple of weeks ago, so I don't know if Procter & Gamble is still below the 200-day moving average, but even as of the hard right edge, below the 200-day moving average, you're not taking any trades. All right. Now, yes, that was only one stock, and that was a cherry-picked stock. So we're gonna now kind of move to the VectorVest method of stock selection, and that is by ranking a list of stocks by a particular indicator or combination of indicators. But what I did now to kind of demonstrate the system a little bit further is I went into the S&P 500 watch list, great list of stocks, right? No oil though, no petro. And I sorted that list. I think in that watch list about 480 stocks or so. I think 20 plus stocks make up 20 plus oil stocks make up the entire S&P. But I eliminated oil. I want to kind of stay with broad market stocks, equities, and I ranked that list by comfort index, CI. Why CI? Well, I know what type of stock chart I'm going to see when looking at a high CI stock, right? If you know, comfort index, CI, is a VectorVest proprietary indicator. It measures a stock's ability to withstand long or lengthy price declines. In other words, high CI stocks, they go from bottom left to upper right. Sure, they're going to pull back, but they've shown historically to be resilient to those pullbacks. So the top 5 comfort index stocks in the S&P 500 no watch list, pay attention to the date. The date's important. As of March 7th of 2023. So if you go into the VectorVest program, you go into that watch list on March 7th of 2023, here are your top 5 CI stocks. I looked at the charts for the previous year, March 7th of 22 to March 7th of 23. All across all 5 stocks, there were 89 RSI2 setups across all five, not 89 apiece. Across all five, 89 RSI2 setups, 74 winning trades, only 15 losing trades. That's also right around an 83% winning trade percentage. So this is a much more empirical, systematic methodology on how to trade the RSI2, as opposed to, hey, here's a stock, guys, and here's the results, like I just did with Procter & Gamble. But here's a much more empirical way to kind of see this system in practice. Now, since March 7th of 2023, those same stocks experienced 52 RSI2 setups. So those were the top CI stocks as of March 7th of 2023. I ran through the same exercise and I looked at all the RSI2 setups from March 7th of 2023 to current. There were 52 RSI2 setups, 33 winners, 19 losers. That's only a 63% winning trade percentage. And I'm kidding when I say only. It's not 83. It's not 93. It's 63. I'm very happy with 63% winning trades. So what I'm showing you here is what your kind of expected winning percentage might be using this system and really favoring, excuse me, the top CI stocks, really in any list, but I prefer the S&P 500 no petro. So what you're doing is you're going into that watch list on any given day and you're ranking the list by CI and you're favoring the top stocks in the list. That's what this portfolio does, or did. This is a long-term portfolio now that centers around the same stock selection system that I just taught you. What's the stock selection criteria that I just taught you? It is top CI stocks in the S&P 500 no petrol watch list, whose price is above the 200-day moving average but below the 5-day moving average with the 2-period RSI below 10. This portfolio buys those stocks. The exit criteria here is a little different than what I just taught you. The only reason for that is because within the VectorVest program, within the backtester, within the Genius, within RoboTrader, there is no stop criteria. There is no automated exit criteria where we're going to close when the stock price goes above the 5-day moving average. We don't have that in the program. I wish we did. So when I created this system years ago, I mean, probably maybe 2013 or 2014, maybe somewhere right in this area, maybe 15, when I first created this variation of the RSI2, I used a different exit criteria. Talk about that later. But this system produced 846%. Everybody sitting down? Ready? How many years is this? February of 2010, by the way, I didn't mention that. February of 2010 all the way to current. Notice the volatility in the performance really since COVID. I mean, that's when volatility really started to pick up, right? Lot wider swings, but look, this is hard right edge, and we are just off of the hard right edge, or just off of the all-time high recently. 846% gain, 266 winning trades, and 20 losing trades. That's a 93% winning trade percentage. 93%. This is an automated way to trade the RSI2. Doesn't use market timing either, by the way. Why? Because it worked the best. Allowing the RSI2 system to pinpoint when to buy and sell, and that's such a unique and really effective stock timing system, right? Individual stock timing system. It just so happened to not work better not using any market timing than to use market timing signals. Not many strategies are like that. Not many automated trading systems are like that. But this has such a very unique setup that it performs well in all types of markets. The VectorVest composite during the same time frame, February of 2010, all the way to current, 2.5x VVC went up 2.5x, 150% roughly. Okay. We tremendously outperformed the market, obviously, 850% over that same time period. Now, you're probably thinking, well, okay, that's a lot. There's a lot to that strategy. I don't have the time to run through all of it. Okay. What I'm about to tell you eliminates all of that time. No matter what we teach you here at VectorVest, we want you to be able to do it faster, smarter, and better. So you might be asking, this is fantastic, but how can I get there? How can I take my trading and my game to the next level? What I'd like to do is just give you all the answers. Instead of having you take bits and pieces of what I taught you today, I'd like to just give you all the answers. So that's why we put together this 6-week webcast series where we teach you techniques from 3 of the very best professional traders in the industry. More on Larry Connors. He developed another technique I'll talk about in a moment. Linda Ratchke and Charles Schaap. They've developed a few fantastic swing trading strategies that quickly and easily identify the best setups. I hope you saw that if you begin to learn and implement strategies like one I showed you today, you'll get there. Your swing trading portfolio will outperform all your other portfolios. I said this is a 6-module course, a 6-week course. The modules that I'm just about to go through and explain here are all pre-recorded. They're in the university upon signing up. We kind of take things a little slow in the first module. It's called Trade Like a Pro. We get you in the correct mindset. We talk a little bit more about how the pros think, risk management strategies, and order entries. All of that carries over to the next modules because now we get into techniques now. So we bring the mindset over from module number 1 and the understanding of what it's going to take to trade this way and proper risk management and order entries. We bring all that and we start to talk then about trading systems, trading techniques. Module number 2 is not a professional trader's technique per se, but it's how to trade bullish and bearish candlestick reversal signals. You know, I don't know if you ever heard of Steve Bigelow. He's done a lot of work with and created techniques using candlestick signals and other indicators. We're going to do that as well. We're going to apply stochastics to bullish and bearish candlestick signals and pinpoint entries and exits. What I love about the bullish candlestick and the bearish candlestick signals themselves, the reversal patterns, is they have predetermined, kind of set in stone confirmation levels and stop losses baked into the pattern. So we explain all that and how to trade that, bullish and bearish candlestick signals. Number 3, gaining the trader's edge. This is about, hey, you're going to experience different types of market environments, right? I mean, not all markets are the same. We'd love for the markets to trend higher or lower, you know, for extended periods of time. We can make money on both sides. That's fantastic. That's you know, everybody's dream. Markets don't trade that way. Sometimes they trade sideways. Sometimes they hit extremely oversold situations. We got to be prepared, and we have to know how to trade the different types of markets that we'll encounter. Then in Module 4, now we get into the first professional trader's technique. Linda Ratchke, she developed this system called the Holy Grail. It's fantastic. Doesn't use a ton of indicators, but it's a very short-term system. It's for both bullish and bearish markets. So whether the market's bullish or bearish, you have a system, kind of the mirror image of the bullish pattern is the bearish pattern. But this also has predetermined criteria on when to take the trade, when to take your profits, and when to cut your losses. Remember earlier I said that this is what one of the things that separates pros from everybody else is they have all these things lined up already. They never worry about what am I going to do now, right? I get that question sometimes. What do I do now? I hate answering it because it means you didn't know what to do before getting in, right? You got to know what you're going to do, when you're going to get out, when you're going to take profits before you get in. And sometimes you don't because there is no real system that you're applying, right? I'm not sure what we're doing, but there's really no system that you're applying. Maybe it's more of a random, arbitrary way of stock selection. But this is not that. This is very systematic, very rules driven. Module number 5, Charles Schaap developed 2 systems, one called the 50-50, the other called 80 Excellence. I like the 50-50. It's not as short term as the Holy Grail, a little bit more intermediate term. It uses a 50-day moving average and a 20-period RSI. Okay? And I'll explain all of that, in module number 5. And then 80 Excellence uses 80X and it's a directional indicator, DI and minus DI, plus DI and minus DI. It's a great system as well for identifying emerging trends. And then in module number 6, RSI2, a little bit more about that trading system, and another one that Larry Connors developed called RSI25, exclusively for ETFs. Bullish or bearish ETFs, inverse or bullish ETFs. Little similar to the RSI2, a little different, uses RSI as well, but it's a fantastic technique for ETFs only. So those are the 6 modules. Again, they're pre-recorded. Let's talk about some special bonuses that you'll get. 1-year access to this course. This is a course that we have in the university. We sell this course for $995. It's a 6-module course on candlestick signals. We touch on a few of them in module number 2 in Trade Like a Pro. We have a 6-module course on a dozen bullish and bearish candlestick signals. Okay, this is a self-study course, which means there will be no live mastery sessions for the candlestick course. However, for Trade Like a Pro, we will be meeting live 6 times. That again, mastering the art of candlestick analysis, that is given to you for a whole year as a bonus. It's a self-study course. Everything you do there is kind of on your own. Trade Like a Pro, we will meet live 6 times. These sessions here, these live mastery sessions, are designed to help you implement the things that you learned in the course. We'll take a look at the things you're doing. You have any questions you have, we'll guide you along the way. You'll also be given a homework assignment after each module, and we'll go over the homework assignment here in the mastery sessions. And what Steve and I do, Steve Chappell, he is your other instructor. He and I will be your instructors for this course. What we do during these mastery sessions is we look at the homework assignment, yes, and what you'll notice is the modules, the pre-recorded modules, kind of the training modules, have historical examples. So if I'm teaching the RSI2 in module number 6 or the Holy Grail in module number 4, it's on historical examples. That's fine. We can teach systems on historical examples, using historical examples. But what these sessions, what I like about these sessions is then, all right, we take that and we look for real trades. We look at the real market on these days, on these mastery session days, and say, okay, what did we learn in module 4? We learned about the Holy Grail. Let's look for some Holy Grail setups today. So you know, as of a hard right edge, what the setup should look like. You know what the setup should look like because that's what you learned in the module. But we go through in the real market, which I love about these sessions. If you don't currently have VectorVest, or you don't currently have VectorVest Premium, which is our real-time data for the U.S. market, we're going to give you access to it for 70 days. VectorVest Premium, again, real-time data for the U.S. market, includes pro trader searches, which you're going to see in a moment come in really handy, and the auto timer as well. Okay, so you're going to get 70 days access to it. We're also going to do a live bonus session. This is a live trading session. This is where we're going to implement everything that we've learned over the course of the 6 weeks. We start this session at 8:30 a.m. Eastern Time, an hour before the market opens, because I know, sorry to you guys out in the West Coast, but you should be up that early, right? You're up an hour before the market opens. But we spend that hour going through everything that you need to be going through before the bell rings. Now, some of the stuff can be done the night before, but we allocate an hour before the market opens, because in the session we'll step you through everything from market analysis, determining whether you're bullish or bearish, trade setup, and this is where we'll run the scans. Okay? Exclusively for workshop attendees, you will receive pre-built scans that make finding your trades a breeze. You're probably thinking, all right, if they're going to teach us the RSI2 and the Holy Grail, 50-50, how on earth am I going to find trades, actual trades, right? The legwork has been done already. I built these scans to quickly and easily find the best candidates to trade. And the great thing about this is we're going to insert these scans into your program. You don't have to build them yourselves. So the first part of the live trading session is market analysis. Then it's trade setup. We run all of our scans. We look for 50-50 candidates. We look for RSI2s. We look for holy grails. We'll look for bullish candlestick signals if the market's bullish. We'll look for some bearish trades if the market's bearish. But we run the scans, we set up the trades, and then we wait for the market to open. Part of the trade setup is understanding where your confirmation level is, right? So we know that, and we recognize that during that session and see if any trades follow through, and we'll go ahead and place them. You'll also get this. This is an automated version of the RSI2 system that I taught you that produced over the last 13 plus years 93% winning trades with an 846% gain, with the market only going up 150% over that time period. Now, there are variables in an automated system that you will get. The exit criteria, how many stocks this portfolio manages, do I replace or not replace, what's my industry and sector diversification look like, all of that, right? All those little nuanced kind of buttons in the portfolio, in the Genius, when you're setting up an automated system. This is a hands-off automated system. Okay, the exit criteria you will get. Now, most importantly, you'll get hands-on training by both Steve and myself. Steve Chappell is the Director of Trading Systems Development, big part of developing this course with me. Steve and I will be manning the chat rooms, so you can ask us questions throughout the course. Now, the course is valued at $29.95. We have an early bird rate that's available, but we're going to knock the early bird rate down for a very limited time only for you folks, you guys that are here today, because I want to say, give you guys a thank you. Thank you for joining me today. I'm going to type in that address that I see at the bottom there, vectorvest.com/TLP, so you can just click on it. There it is, vectorvest.com/TLP. $22.95. Let me go through what you get. 6 pre-recorded modules, 6 live mastery support sessions. You get 1-year access to the course, the Trade Like a Pro course, by the way. You're also going to be given 1-year access to the Master the Art of Candlestick Analysis. You're going to get the automated RSI2 system. You're going to get all of the scans that we're going to use during the course. We have the live bonus session as well. And what am I missing? Oh, yeah, 70 days access to the VectorVest Premium program if you don't already have it. All of that for $22.95. By the way, this is 100% money back guaranteed. If after the course is over, basically 7 weeks, you've done the work, watched the recordings, done any of the assignments. We know that if you do or not, we're watching, and you're still not satisfied, we'll gladly give you a refund. Okay? Now, here are the dates of the live mastery sessions. We begin in what? 2 weeks. 2 weeks from today. 2 weeks from today. You have plenty of time to get into the course outline. By the way, when you register for the course, you're going to get an email with these dates and directions on how to access the course. Okay? Once you do access the course outline, you will see all of the pre-recorded modules. You'll actually see all of the mastery sessions that Steve and I did a few months back. Here are the dates for our sessions, for our class. I think they're all on Tuesdays, yep. And the sessions start at 11 a.m. Okay, so the market is still open. Still just kind of early stages of the session. And this is, again, where we'll look for some trades, based on the technique that was taught in the module. Now, mastery session number 1, we're only going to cover and review the contents of module number 1. Mastery session number 2, same thing, so on and so forth. Okay, live session, our live trading session will be on December 5th at 8:30 a.m. Eastern Time. And I went through why we start an hour before the market opens, a lot to cover there. And I'll explain the difference between someone who can't watch the market the next day, but still wants to trade these techniques. Can't watch the market, you're working, whatever the case may be, but you want to be able to trade these systems. We'll talk about proper order entry and trade setup for you folks. So we call you guys the Midnight Cowboys, who do a lot of research the night before. So a lot of the steps that we'll discuss in this session will be done the night before if you are a Midnight Cowboy. Okay? So go to that website that you see there, www.vectorvest.com/TLP. Here are the 6 modules. We do start in a couple weeks. Michael, don't have time to talk more about the RSI. If you want to learn more about the relative strength index, you can just Google it. You'll get a ton of different articles and essays written about it. You want to know the calculation of it, it's there as well. Calculation is tedious. But I am recording this session, so when anything that I talked about with the RSI2 earlier, you will get the recording here in a few hours or maybe later on this evening. Listen, that $22.95 rate only available for a short period of time. Okay, otherwise it's going to revert back to the early bird rate of $24.95. But a ton of bonuses for that $22.95, and again, 100% money back guaranteed. All right, guys, so go to vectorvest.com/TLP. We begin in 2 weeks. You got 2 weeks to digest as many or as much of this content as you want. I'm a binge watcher. I'm a Netflix binge watcher. If I get attached to a show, it's not stopping until it's over. So you might be the same type in turn. When it comes to this content, you just blast through it. Great, you can go back and watch it. Yes, thank you, Rod. Appreciate the reminder. In a moment, you will see a PDF in the handout section of your GoToMeeting control panel. Rod just reminded me about the slides. I'll put them in the handout section of your GoToMeeting control panel. You should see them now. It says PDF, TLP, it's a PDF. So in your GoToMeeting control panel, you have some different options there. You can chat, right? You have the kind of your view, and then you have another section there for handouts. Okay, and it says TLP PDF. I'll keep those in there. When I stop here, give you a chance to open it up and download it. Please do that to your computer. All right, guys, thank you for joining me here today. Beautiful Tuesday morning here into the afternoon in Charlotte, North Carolina, right in the Charlotte, North Carolina area. So hope you guys enjoy the rest of your day. Robert's asking, any discount available for individuals signed up for previous courses or this year, like Options Pro? If you are an elite subscriber, okay, I don't know if you are an elite subscriber or not. If you don't know if you are, contact our support department. The actual rate is $1497.50. All right, half off the regular rate. But if you're not an elite subscriber, no other discount other than the discount that we're seeing here, which is lower than the early bird rate. You're welcome, Tom. Absolutely. See you soon, Tom. Take care, everybody. I hope you guys enjoyed today's webinar, learned a little bit. Want to learn more? We have a ton of different strategies here that will really help you with your swing trading portfolio. Take care, everybody. You're very welcome. You guys have a great rest of your day.